Hello, everyone. Welcome and good afternoon. You're very welcome to join us for this trading session where we're looking to trade the US Open. My name is Tim and I'm one of the traders here at the live trade room. And we'll be trading this session fully live and interactive through our YouTube channel. Now, for those of you that are interested perhaps in learning how to trade the financial markets with a high degree of knowledge and understanding and an ability to make consistent and disciplined trading decisions, then certainly we can help you as an organization. So we want our traders to be very informed about the decisions that they make, be very disciplined with their capital, learn how to be consistent in your trading decision processes. And of course, being patient as well is something that new and inexperienced traders can really struggle with. So we can absolutely help you. Do just go to our website, www.thelivetraderoom.com, for more information, and do feel free to get in touch with the chat function if you do have further questions. And we've got a vast range of products and services available there for you, all at low cost. So over the next hour or two, what we'll be going through is the process in which we engage with these financial markets. So we'll be looking for high probability trading opportunities across some of the world's largest, most liquid markets, from your foreign exchange, like a euro dollar, dollar yen, pound yen, euro pound, a whole range of sort of dollar major pairs. We'll also look at commodities like gold and oil, and the indice markets like US indices, the S&P, European DAX and FTSE, and also the Nikkei. So we'll be looking for opportunities across multi-asset class. That's really quite important for us when we trade, because we do look for correlations in markets. So if the equity markets push higher, that can give us certain opportunities in other markets as well, and vice versa. If they push to the downside, then we can look for certain opportunities across different correlated markets. Okay, so let's start then, and we'll start as we always do with our risk warning. So please take a brief moment to familiarize yourself, and we shall get straight into this trading session, and let's see how much cash we can make. Okay, so a pretty eventful period over the last 24 hours. Before I just go into some of the technicals behind these markets, let's just have a quick look at some of the news events. So we just want to be mindful of any major news events when we trade any particular session. And straight away, what we're looking for is some high impact news events. And you can see we've really got two over the course of the day. The first one is the OPEC JMMC, which are still in the process of meeting. And the latest development really, and we very well may get some updates pretty soon through our Squawk service, which you might hear in the background in just a minute. But what's anticipated now is actually the tapering of the supply cuts that have been in place for a few years now to try and support the price of oil, are currently being unwound. But what they're thinking now is that the level at which the cuts were supposed to be tapered off is looked to be being reduced. So we're talking about smaller increases in production than perhaps originally anticipated. So it remains to be seen what that will effectively mean for the price of oil. We'll come on to it in just a moment. We'll have a look at this market in detail. Broadly speaking, though, we've had very little impact so far. So let's see if when an announcement is made, so we can see what the supply arrangements are, and we'll see what impact that will then have on the price of oil, and it may give us some good opportunities. We'll have to wait and see. Also today, it's interesting to note that we had a significant late day move in yesterday's markets from the indice markets. And we've had that late day move to the downside. So we've seen the indice markets take a rollover to the downside. There's real structural concern about inflation and also the bond buying program, which the Fed have been involved in now for over 12 years. injecting vast amounts of capital into the system in a hope that it'll stabilize things and create a bit of price stability. As we know, the main beneficiary of that policy has been the equity markets have achieved multiple higher highs for quite some time now. And is that about to finish? We'll have to wait and see. The Fed have done what they've can to try and support the policies of the past, and it remains to be seen whether the markets will follow through and believe in what the Fed are effectively in their position. So we shall, of course, wait and see, but that is due out just after the European and UK close, and if we see some volatility around that period, that very well may be why. So, okay, let's get up our trading charts then, and we'll see. So what we can, every evening at 9 o'clock we have a live trade plan webinar, which allows us to identify the high probability trades when we get to our trading desk. And 3 trades from last night, along with the dollar yen and the dollar Swiss, which we'll have a look at in just a moment, it was really a focus on seeing if we were going to get more downside price action in the indices markets. And actually we saw a move over the Asian session where we saw the markets continue to the downside. But it's quite interesting to note that we do have quite strong levels of support, and the market has reacted off those levels. So with the Nasdaq, for example, we had a flush to the downside, and now we've had a pretty strong pullback to that 12,658 level, and it's not that convincing. And if you look at it on an hourly time frame, it actually looks like we could be close to perhaps seeing a reversal signal to the upside. So this is the flush down in the latter part of the Asian session, a really strong comprehensive move from last night. When the European markets closed, we had this comprehensive move lower. We have some continuation, and then we've made a low, and we've had quite a strong pullback. We've extended to the downside and failed to make a new low. So now this is your structural failure trade, actually back to the upside. So will we get that flush further lower? We're not too sure just yet. So we can zoom in. This is a strong level of resistance, so that's why we saw the initial sort of attempt to push further lower. But you can see that in the last 2 hours we've just begun to unwound that little move, and actually a break above this level would be a possible buy trade, believe it or not, above the 12,705 level. So we've made a low, and now this becomes a higher low, and we could be back to the upside, and we're seeing that across the indices markets as well. So it's not just a standalone type of trade. If we look at the Dow Jones, very similar, strong rejection on the daily candlestick. This is the 50 period moving average. We've had a really strong, convincing move to the downside, but a really strong rejection of that 50 period moving average, and now we've kind of reversed back now above at the previous day's low. So will we get some bullish price action start to come in to focus once more? It would not surprise us at all with these indices markets. That seems to be what they do. So the Dow Jones just potentially flirting with the previous day's low. And again, if we look at this on the smaller term time frame, it looks like what we've got, almost 12 hours of sideways moving price action. So really it's a breakout to the upside, or potentially a committed close and a breakout further lower. So at the moment we're just in this little sideways moving pattern. So what that can allow us to do is just be patient for now, not be too angsty to get into the trade, because what we want to do is to confirm direction. So previously we were looking for selling opportunities, and those occurred during the Asian session, and now we're just pulling back a little bit. It just remains to be seen what the true direction for this market actually is. Okay.
So moving into 3 minutes until the bottom of the hour, we get US Challenger job cuts year on year for February. We have a prior of 17.4%.
So we'll get updates from our Squawk service as well. Yes, the Challenger job cuts yearly figures. It's a low impact news event, so very unlikely to have any major impact. So those were the large focus of last night's trade plan webinar. So let's see what other opportunities may lie elsewhere. The euro dollar is an interesting opportunity. However, only below this level here, we've got 100 period moving average just providing a bit of support. So this is on a daily time frame, but we're kind of in this range, firmly in this range over the last few days. So our bias is to the downside. We would just need to focus on that entry and see. We'd be looking to get in below the 2020 level actually. See if we got the next flush to the downside. So it has been an indecisive market for quite some time now. So we don't want to be quick to be jumping into this, because the overall market conditions for these trades are very much sideways moving. So we've got that sideways moving bit of price action there. Okay, so let's flick through some of the other dollar pairs. What you'll see is a number of markets which are not crying out to be traded just yet until we get some direction really. So the pound dollar is just really in this little sideways fairly tight range from 139.75 to 139.35, let's say, or a bit lower, 139.20. So we're only talking about like a 50-60 pip range really over the last few days for this market, which is absolutely nothing. It really is. So we had yesterday's budget. There's clearly a little bit of a pause in this market now. Dollar yen just accelerating to the upside. So the dollar yen to the upside and the dollar Swiss to the upside. It's still maintaining its the capital that's kind of coming out of your equity markets.
Negative 39.1% there for the US Challenger February job cuts, falling 39.
It seems to be benefiting the dollar yen and the dollar Swiss. So we're still in the dollar yen to the upside. We can actually mitigate some risk on that trade, so we can now get ourselves into a bit of profit now in this trade. So we'll take the low, which is the 106.96, and we'll just add or apply our 2 times the spread rule to our highs and our lows. So we never get in at the exact level. So if we take today's daily high, for example, the 106.96, we don't want to put a profitable exit at 106.96. So we'll always put it in. We work out what 2 times the spread is, and that can vary from market to market. So it's kind of a standard approach. So we can see that spread in the dollar yen is a 2 pip spread. So we will times that by 2, which is 4 pips, and we'll just make sure that our profitable exit, if prices roll over to the downside, is actually below today's daily low and not exactly on that level, but only by 4 pips. So we can safely say our precise profitable exit now for the dollar yen trade is the 106.92 level. So we'll adapt and we'll amend that order. So let's get up to dollar yen. Okay, let's modify, and so our stop loss goes from 106.66 to 106.92. So nearly a 30 pip increase in that, and you can see our stop loss now. You can see it just sits in below today's daily low. Now the price is all the way up here. So objective for us when we trade has been achieved. We have broken even on the trade. So that's an important part of trading these financial markets, making sure you mitigate risk as quickly as you can, and then look to let the winners run when we get those opportunities. Okay, so so the dollar yen has, we're a good sort of 45 pips further on up to the upside, and this is the process of us looking to let our winners run. So we don't want to get in the way of this. We don't want to necessarily book in profits at these levels just because we can. We don't know if we'll get a really sizable move over the next day or two. So what we want to do is trade the price action, and for the time being, there's no reason to get out of the trade, and there's been very little reason to get out of it actually over the last 3 or 4 days. So we are continuing to push higher. So we want to see what type of profit now we can exclusively focus on building into this trade. So we're already in a profitable position, but prices are considerably higher. And let's see if we get another move to the upside and book in profits, hopefully at a higher price. So this is just trade management. So now it's no longer a stop loss. So now it's a profitable exit at 106.92. So obviously, if you're taking a loss on a trade, you are actively working with a stop loss, and it's the same mechanism. It's still referred to as a stop loss, but get in the routine of referring to it as a profitable exit, because that's effectively what's happening. You're not stopping your trade for a loss any longer. You're actually you're booking in some profit on the trade. So it is more of a profitable exit than a stop loss. And that just differentiates between, taking a profit and taking a loss. So this trade is a buy trade at 106.80 with a profitable exit at 106.92, but with hopefully potential to be booking in more profit, hopefully by end of week. The same situation really. We're still in this on the daily time frames. We failed to see there was a sort of a mini floor created in here at the 91.34, but we started to see some accelerated moves to the upside yesterday, and we've seen some nice continuation today. So this is a market that's been fantastic from a daily time frame perspective, and we're still in the trade. So we'll stay in it as long as necessary. As long as it keeps making money, then we're more than happy to let those trades continue to move. So that's the dollar Swiss. So elsewhere, the opportunities are a bit scant, really. So the dollar CAD, not much. The Aussie dollar, This was a trade we were interested to see if we'd get a little rollover trade to the downside, and as you can see, we broke lower, but then subsequently reversed. Looked to actually get quite bullish, and then saw price actions just actually roll back. So it's a bit of an indecisive bit of price action now. It's a bullish spinning top. So that's really, there's not too much to work with there, unfortunately. Let's look at it on the hourly time frame. So we're interested to see this accelerate to the downside, which is what we saw, and now we've had a pretty significant pullback, and now a break above the 78.16 actually becomes a buying signal now at that point. So yesterday we were looking to get in on this sell trade, and we refrained from doing so. We weren't really seeing the correlations fall into place for the trade, so it was more of a technical move than kind of a coherent approach. So the Aussie dollar became a kind of a bit of a no for us. A same situation with New Zealand dollar. We're expecting it to, on multiple occasions, kind of failed to do that, and just was in this little sideways moving pattern. So again, as always, the reasons why we like consolidation is we generally get breakouts to the upside and to the downside, but on this occasion that's not the case. So New Zealand dollar, just looking at it on the daily time frame, you can see what's happening. There's very little to work with. It's just pure indecision really at the moment. The pound is very mildly just picking up a little bit of pace, not so much against the dollar. In fact, the dollar is marginally stronger, but and it's helping because of the strength and weakness dynamic. It's actually helping our dollar yen trade, which continued to push higher. So that's good news for that trade. But we are seeing the pound begin to move against the euro and also against the yen. So we can certainly add these two trades to our analysis to see if we get a coherent move to the downside. The euro yen is attempting to push higher, but no real kind of movement really as such. Gold just bouncing off the lows. We are committed to this to the downside again on the daily time frame, so we're just getting a bit of pullback price action. You can look for these correlations where you get a selling candlestick, you get a buying, you get a selling, you get a buying. So tomorrow we would hope to see some selling creeping into this trade, but for now just mildly strengthening, but it's very, very mild indeed. Bearing in mind we've got OPEC, we haven't really seen any move of any kind just yet, just mild bullish price action really, with the gold, with the crude oil market. So when you see markets like this, there is, I suppose, a bias to the downside. So no surprise to be seeing prices rolling over. But we look for the close of these markets, and you can also take the lows. If I put in a low down here as well, we can see these two levels. We can say, okay, if this market breaks below the 38.10, we're going to sit up and take note. And if it clears the 37.89, which is only sort of 21 points, then we could very much be off to the downside, and there's your high probability trade to the downside, and you'll have all of these sellers behind you in that trade. But we only saw a very, very brief kind of move to the downside, followed by kind of a strong reversal. So at that point, you have a few question marks over the trade. So what was very close to being a trigger and a reason to get in soon became, you know, a reason to be patient once more. And we're seeing that across these equity markets. Sorry, let me look at it on the daily time frame. So this is the all important level. We're below the 50 period moving average, below today's daily low, which is just sitting in here, which is a 5-day low as well. And we had a nice break to the downside in the Nasdaq over the Asian session, and now we're failing to get some follow through down at these lows. So we've now been in this fairly tight range now for probably 12 hours, is it? Something like that. 2, 4, 6, 8, 10, 12, 13 hours. So we've been in a range bound pattern now for over the course of the last 12 hours. And that's why it just opens up the potential for a bit of a buy trade now, because we've again failed to make a new low, and now we've seen that structural failure to the upside. So we can certainly keep an eye on these markets and see which markets give us the best opportunity. But as you can see, the quality of the price action is really not great. FTSE literally doing nothing like it was doing yesterday. The DAX is a very sort of choppy up and down type of market, so we're not really enjoying trading that either. And the Nikkei, the level last night was the 29,268, so we got a really nice solid move to the downside. We were talking about the 50 period moving average in here at the 28,729, and we've had a bit of a bounce off that level, as you can see. So so when we look at it when we hit our trading platform, we can see that the really strong move over the Asian session. We create a low. We've had a little bit of a pullback in the European Open, an attempt to make a new low, which has now failed. So this is our low, and this is now a higher low. And this is why, if we see this little bit of price action start to reverse, then actually there's your high probability trade back to the upside. There is numerous levels of resistance at these levels, at these higher levels. So a few markets here to watch and to keep a close eye out for. And then just to see what's going on with Bitcoin on the daily time frame. Yesterday, a really strong move higher. It looked like we were back up to the upside, but we're seeing this little pattern of buying followed by some selling, and then tomorrow potentially buying again. So you can look for these little patterns. So currently selling off below that 50,000 level, so we're just trading above and below that level as we speak. So there's a few markets to focus on. The euro dollar can be one. The dollar yen is continuing to squeeze higher. The dollar Swiss for sure. Just to see if it can give us a decent opportunity. It'll be the dollar that we're actually looking to trade, and then we shall. Gold market is just reversing off its lows, and then we look at the indices markets. So the Nasdaq, the Dow Jones, and the Nikkei. So these are all. We'll have a look at these all on a strong reversal signals. So let's look at them on a fairly decent time frame, like the 1 hour, just to see if we get these little structural failures back to the upside. The conditions are still, for now, really broadly quite supportive of the indices markets. They are sort of reacting quite aggressively, actually, to the increasing bond yields. there's your structural failure trade to the upside. So we can keep track on that. There's the level, same level for the NASDAQ. We'll keep a close eye on this, and there's that same level there. So you can see the correlation across the indice markets. They're virtually in the same place, and that can give you a little bit of confidence, really. So if we decide to get into maybe one or even two of these trades, we can see that they're heavily correlated. Excuse me. So so we're kind of approaching the US Open then. You see, it wouldn't be a great idea for us to commit ourselves to the upside or to the downside in these markets, but we can certainly be able to identify a bit of a short-term swing trade to the upside. Just want to have a look at the S&P, see what this is doing. So we're just trading this in a sideways fashion. There's your consolidation now for you know, the last 12-13 hours. So we will keep our options open for a US buy trade. Let's have a look at all of the equity markets across the board, and we'll take the dollar Swiss off the table for the time being, and we'll look at the euro at these smaller levels, and Japanese yen. Okay, so so we can have a look at these indice markets and see we're seeing the potential for some structural failures across the equity markets, and that can become and we're just mindful we've got Jerome Powell at 5 o'clock today, but we might get a nice concise opportunity where you're looking at the S&P above the 38.23, and you could have could even go a little bit higher actually on this one, the 37.92, 37.83. So you'd want to secure the structural low, which is the 73.83. That would provide a little bit more confidence really to the upside. So we'll certainly see if we get these structural failure trades across the board. So we've got some trades to engage with today. How much conviction there is behind these buy trades, that's a bit of a tough one. The backdrop is a little bit complicated now for the indice markets. Our buy trade in the dollar yen is performing really quite nicely now. Like I said, we've got that new stop loss at the 106, the profitable exit, should I say, the PE profitable exit at 106.92, and we're up at the 107.40. So a really nice continuation trade to the upside. there might be a good opportunity for the dollar Swiss to the the euro dollar to the downside, should I say. The dollar Swiss is still performing nicely. Yeah, very close to momentum highs there. So now we're at 38.23. 38.23. So it's that structural failure trade. Okay, potential buy trade above that 38.23. So potential buy trade this time above 29.139. Okay, we can do the same for the Nasdaq. So this time it would be a buy above the 12.709. 709. Okay, we'll stick that in there. And last but not least, the Dow Jones. We'll see if this is a good, strong, viable opportunity for us. And the level in the Dow Jones is the 31,300. Okay, so this is our trade plan for the indices markets, currently up on screen with the levels that are of importance, really, to the levels to keep a close eye out for. Anyone interested in the dollar yen, you're now needing unfortunately a little bit of a pullback now at this stage to get in, around this sort of price to take the next leg to the upside. So we doubt it'll continue its progress, really. It very well may keep sort of grinding higher. We'll have to wait and see, but you would want to get in on a pullback now at this stage. So that's a great trade, continuing to the upside. And then the euro dollar, I'm just keeping a close eye on this because these lows down here are quite important. We've got, on the daily time frame, we've got kind of a strong level of support recently in here around that 120.20 level. So a flush through, and on the daily time frame it would be below the 100 period moving average. So it'd be an opportunity to get in below the 120.20 level. Okay, so let's See what. So the 121.07. 2100. So let's, for the sake of a few pips, let's look at the 12100. We'll be comfortably below the 100 period moving average, and so potential sell trade below the 2100. Let's get rid of a few of these. Okay, so that's pretty much our trade plan. Not a huge amount going on elsewhere, really. I'm just looking off screen to see if there's any better opportunities anywhere else. Pound dollar's not doing anything. Yeah, so that dollar yen, dollar Swiss are the only two really. Dollar CAD not doing much. Nothing really with the Aussie and the New Zealand. Euro pound. You see, the problem is the price action. If you look at it over the last 3 or 4 days, I might just share this with you actually. So let's just look at this price action in here. The volatility in the day's trading is really, really low. So we're talking about a range of 86.52 to 86.22. So you're talking about a 30 pip range for the whole trading day, and we've seen something similar for the last few days. So generally speaking, if we get into a trade and we do have, let's say we use that 30 pip stop loss, you know, to get a 2 times positive risk reward off the trade, we need this market to basically push lower for 2 days, and we've probably got better opportunities elsewhere, to be honest. So it's just a volatility issue really as far as the euro pound's concerned. Euro yen, nothing. Yeah, the pound yen could be an interesting market. Let's have a quick look at the pound yen just to see if there's anything else to add to our analysis. So it's a multiple structural failure to the upside. So we were at these highs, we bounced, made a new low, and we made a more recent low. So now we're just making that little move to the upside. The pound against the dollar is not really performing in any way, shape or form. The yen is selling off against the dollar, mildly against the euro. So there is an opportunity actually here, and it would be, we're looking at it on the hourly time frame, so it would be above that 149.78 level, which is just below the 150. So the only problem is we've got quite a long stop loss. It'd have to be all the way back here, the 149.29 level. So we're up at the 80 level now as we speak. So we're talking about a 50 pip stop loss in this market, which wouldn't be unusual really for the pound yen, to be fair. Let's see the range in this market over the last few days. So yesterday we saw a range of an 80 pip move. A 100 pip move. This is 100 pips as well. Yes, it is. A little bit more. 150 or so. So the last 3 or 4 trading days, you can see the price action for yourself. It's so we're going to just back off the pound yen. There is a technical trade there. We don't have a huge amount of conviction for it just yet. We would like to see what's likely to happen with the pound, because it's very indecisive against the dollar at the moment. Crude oil, nothing is really happening there at all. So let's revert back to these trading opportunities and see. So we're waiting for these structural failure trades across these 4 markets. We've got the 150 level just above these current highs as well. So there's probably too many reasons perhaps not to get into the pound yen. The euro dollar absolutely to the downside, and probably the biggest move of the day is the dollar yen, which we're already in. Excuse me. We'll have a look at it on the smaller time frame so we can. So with all of these levels, just from an education perspective, really, what we're looking to see is if we identify these levels, I'll just zoom in here so you can see it as close as you can. So this is the price action that we're looking at very, very carefully. And what we generally want to see is the market close above an important level of support and resistance. So there's your candlestick, there's your open, there's your close, there's your high, and there's your low. So a candlestick like that is fantastic, but that's only half the story.
UK PM Johnson, spokesman here, says Britain notified the EU at the official level and the Irish government earlier this week about the moves to ease the post-Brexit trade with Northern Ireland.
Okay, so that's going to probably develop into a bit of an issue now. Along with the vaccine.
The spokesman here says it remains our position that we want the EU to ratify the trade deal as soon as possible.
Yeah, it's still going to be a bit of an issue really for trade between the UK and the Republic of Ireland, just because of the border there with Northern Ireland, and the vaccine as well. You know, to have vaccinated people on one side and unvaccinated people on the other, and a lot of movement between that border, it does potentially create problems. So this bit of price action up on screen would represent the structural failure trade to the upside. So the first part would be fine. Then what we want to see is continuation. So we want to see further momentum. So we're ticking a lot of the boxes. We've broken above the 83.20, the 38.23 level with conviction and volume. we've closed above the level, which is exactly what you want to see. And now you want to see some commitment, and you want to see the next sort of candlestick that's coming. So will we get the follow through? If you do, then there's your high probability, very consistent entry on this move. And that means you get the initial breakout, and depending, this could be on a 5-minute chart, by the way. So you could have a little break above the level, which is fine, and then you get the follow through, and that's really your green light to engage and to get going with the trade. Sometimes those are easy, sometimes those are a little bit more difficult. And as you can see, we had this little pullback here. We've extended to the downside, and this market really struggles to close above that 38.14 level. So we've got that first sort of hurdle really for this market to overcome. Can we close above that level? If so, we'll almost sit up on our seat and we'll get ready for that potential buy trade above the 38.23. So just 10 points further higher would be our entry, and we would have a nice clean stop loss at the 37.83 with a decent opportunity further higher. So just touching upon some of the news, we're still awaiting OPEC. We very well may get the decision in the next few hours. What we're expecting is the tapering of the supply cuts. Looks like it's going to be a bit smaller than perhaps initially anticipated. So we shall see if that's the case or not. And then we've got the Fed Chair Jerome Powell. So unfortunately, with markets like this, don't be surprised if there's a bit of subdued price action between now and then. Wouldn't really be that surprised. The markets will be listening very, very carefully to see the state of affairs with regards to the Fed's approach to their bond buying, which they've been participating in now for over 12 years, and also the impact of inflation and potential increasing of interest rates. So those are things that are very significant game changers really for these markets. You see, we really wouldn't be too surprised. I'm fairly certain that the markets will be waiting patiently now for the Fed chair to see, and we're likely to get some quite explosive price action as well off that particular news event. So, would traders and investors look to commit capital to markets that are not really moving very much? The answer is probably not in our experience. So what we might do then, give it a few more minutes. We'll see if there's any influx of capital in these markets over the next 5 minutes or so. And if not, we can just make an assumption that we're probably in for quite a bland trading session. bearing in mind the price action that we've already seen today. And you can see how correlated these markets are, these indice markets. It's virtually the same price action. So they'll all probably strengthen, they'll all probably weaken depending on what direction they decide to go. And then we just got to make a decision whether we're prepared to run with that move or not. If anyone has a trade that you'd like us to look at, I'll be more than happy to do so. If you want to just post the details there into the chat box, that'll be no problem.
German Finance Minister Scholz here saying they will do extra spending activities.
These central bankers really have a job on their hands in the coming years. It's going to be interesting to see, because if as a result of quantitative easing there's unbelievable cash flowing around in the system, and you know, the Fed are buying all sorts of bonds of all sorts of different maturities. You know, they could get to the stage where they're running out of things to buy, and as a result, you know, can they have that real impact on these markets that they used to have? They used to have a lot of bullets, and now they've been spending to a really scary level, with interest rates at virtually zero or at negative depending on the jurisdiction. And how do you unwind all of that? That I think becomes the big question. Now, what it will mean for us as traders is we can buy and sell markets, so it'll be huge. It'll provide us with huge opportunities as traders. We've got absolutely no doubt about that. But for monetary policy and finance and capitalism, really, I'm sure there'll be some consequences to be paid for these types of policies being pursued. So we shall, of course, wait and see. It's such a difficult one. It's a real difficult one. So currently up on screen, really doesn't seem to be an awful lot happening, but we've got our indice markets where we could potentially look at a buying trade. And I use the word potential because with Jerome Powell, there's probably unlikely to be too much commitment in either direction between now and then. That's the reality of it. And we can probably expect a little bit of increased volatility around sort of 5 p.m. UK time. And we still need to await OPEC as well. So once that hits the airwaves, we'll see if there is any decisions made. And just to take you back, actually, because there's something you might be interested in, was yesterday's non-farm payroll, crude oil inventory number. So we were expecting minus 1.3 million barrels. We actually saw a plus 21.6 million barrels in inventory. So that is absolutely massive. It's probably the highest, I think, since the early 80s, if I'm not mistaken. 1982, I think, was the last time we saw a figure this big. And the reason why it's negative is it's likely to have a negative impact on the price of crude oil. However, look what happened to crude oil. It completely ignored that.
So German
Very
Finance Minister
significant.
Scholz here says Germany will need to take on extra debt in 2021.
Okay, so very significant bit of price action yesterday off the back of a very poor figure for the oil markets. So there is that build-up of supply which is being stored, and a lot of it is down to the weather conditions, obviously in the US. But the forecast was so far off, not even in the same ballpark. And we saw negative price action and negative news, positive price action. And that's why there's a little bit of a question mark over these markets. And it all depends on the decisions from OPEC as to whether this pushes higher from here, whether we actually roll over lower. So we have economies reopening. There's lots of positivity, lots of good stuff going on. Some structural issues as well. So we'll just need to be able to trade both, really. Doesn't seem there's too much appetite to be rolling over. Supply sort of tapering the supply cuts by too much will probably see the price fall lower. If they get it right, they might just get further upside price action, but it's just on a tipping point at the moment. It can really go in either direction very quickly. So let's see if there's any more sort of volume in these markets. And it really doesn't look like there is. And there's been a lack of sort of volume for 12-13 hours now in these equity markets, so it's not as if they're continuing their move. The dollar yen is still continuing to the upside, so really good progress made on our dollar yen trade to the upside, with further upside left. Probably there's no reason to get out of it just yet. We've booked in more profit, so now our exit is at 106.92, our profitable exit for the dollar yen, and we're accelerating considerably above that. The euro dollar, we're potentially looking for a sell trade below 2100, but doesn't look like we'll get close to that level. So with the S&P even contemplating getting into the trade, we'd need prices above the 38.23. The yen, sorry, the Nikkei above the 29,139 level. The Nasdaq would have to break with conviction above the 12,713, and then finally the 31,300 level in the Dow Jones. So will we get those? We're not too sure. But look, we can be nice and patient in the interim. We don't need to force trades really today. Certainly the volatility is not really there to any great extent, and if we get follow through, there might be a viable opportunity, and if there isn't, then we can continue to be a little bit patient. So it's kind of a topsy-turvy type of trading week. The opportunities are not sort of clear cut like they were the week before, so we've got to sort of take that into account. But our dollar yen, that and the dollar Swiss are the only trades that are moving. So luckily we're in one of the markets that are moving as per expectation, and many of the other markets are not doing so just yet. So So on that note, then I shall let you guys go for the afternoon. If we get into any trades, we do post them through our Signal service for our traders at the live trade room. For more information, just go to our website there. You'll see the website www.thelivetraderoom.com for more information. And we've got a whole host of products and services available for traders that are genuinely interested in learning how to trade these financial markets. And you can join us there if you wish. We have a trade plan webinar every night at 9 o'clock. We have our Capital Growth live trade room every night at 9:45. We have our Signal service during the day. And we've got a whole range of other our mentoring webinar every Thursday night. We have monthly trade plans and a whole host of different products and services. So it's a really sort of comprehensive offering there for you over at the live trade room. So any questions, do get in touch with us via the website. We'll be happy to speak to you in a bit more detail. Okay, so thank you very much for joining us. We'll see how these trades play out and see if we get any opportunities. But just be mindful, Jerome Powell at 5 p.m. We might see some fireworks around that particular time frame. So we shall see how we get on. So look, from everyone here at the live trade room, thanks very much for joining us as always. Do take care. Give us a thumbs up or subscribe to our channel, and you'll be notified when we go live again. And we do have a lot of content that will be rolled out over the coming weeks and months. So we hope that you can join us for the journey. So for everyone here, take care, and we speak to you soon. Bye for now.